Hey, this is Mike Barnes, the financial first responder. If you're not already a member of the channel, please like and subscribe my channel. Hey, today I'm going to talk about the top seven ways or reasons for you to buy index universal life insurance in 2026. So, this is for first responders, obviously military, medical professionals. I want you to take a real good look at this. It might be something that would be beneficial for your family. Without further ado, let's get started. So, why does this matter in 2026? Is probably what you're saying, Mike Barnes, the financial first responder. First of all, market volatility is the new normal. In other words, that up and down motion of the market. Higher long term tax exposure for those people. The IRS has changed some of their rules on investments as well as crypto, things of that nature. Most of you, if you have a pension, it's shrinking, but most of you don't have a pension. You're in a 401k, which is a big difference. Pension pays you out guaranteed. 401k is, and that's based. The pension is based on your employer. The 401k is based off of your contributions, to be more exact. And then financial protection must last a lifetime. Okay, if you haven't figured this out, and I'm scratching my head because at this point you should understand that you're as good as the money that you keep. Now, reason one, lifetime protection. We've talked about this when we talked about insurance in general. We talked about term, we talked about whole life. Now we're talking about universal life. You need, in most cases, permanent coverage that never expires. As an example, I'm going to use my brothers in law enforcement. If you want to avoid the high cost of term, having to renew or to have to buy it at a higher rate because you're older, this might be a product or insurance plan that you may want to add to your financial plan. Just saying. Just think about that for a second. Oh, before I forget, this is for educational purposes only. I am a licensed financial professional, and this information is to help those who want to take a serious look at their insurance needs on some ways that they could do that. All right. Reason two, growth is tied to an index, which helps with downside protection. Now, when we say an index, it's usually the indexes could be the S&P 500, it could be the Russell 2000, it could be any type of index out there that the insurance company wants to kind of mimic. Now, in my example here, an EMT, and that for you guys, what if you don't know what an EMT is, that would be a medic, um, is protected from market loss by basically tracking or having a account that's tied to an index. Reason three, tax-free access to cash. So I don't know if you think about this for a second. All the cash that's built up in your life insurance is tax-free. You have to borrow it, meaning that you're going to pay yourself back. But who would you rather borrow money from? Yourself or a bank or a credit card? Because they're going to charge you higher interest. You're going to pay a little bit to the insurance company, but it's your money. As an example, I would use is a travel nurse who's handling their relocation expenses or emergency. So for some of you, I have some clients that are travel nurses, and travel nurses pretty much travel all around the country, going to hot spots, as we would like to say, of places where maybe the current medical professionals, i.e., nurses, or doctors, or medical professionals, are on strike for some reason or another. And these people, these men and women, come in and they actually help out the community when there's a strike occurring. And they travel all over the United States um, and the territories helping places that are at risk, usually because they lack a certain appropriate number of medical professionals. But they could use their cash value in their policy if they had an emergency and they had to get to a location. A lot of times there's companies that set these people up, but then some of them are statutory employees, meaning that they get benefits of being an employee. However, they are almost like they're business owners. So some of their expenses they have to pick up until they're paid. So with that said, this may be a way, not the way, a way that a person may be able to use money from their policy for an emergency. Number four, we talk about tax efficient retirement income. So when we talk about retirement income, most of you, we know about Social Security, we know about a 401k, a 403b, a 457. There's different plans out there. But some ways that people have done this in the past, if they've been able to supplement their retirement without increasing their taxable income, and the way they do this is that they're able to take loans on their cash value and not have to pay any taxes on it. And in some cases, it gives them an income stream. Now, an example might be a retired veteran who needs to manage his or her taxes. Because obviously, the older you get, you don't want to pay more in taxes, but the more income or earned income you have, the more you pay in taxes. So, with that said, reason five is that you like flexible premiums. Now, what do I mean by flexible premiums, Mr. Financial First Responder? What I mean by that is this, is that let's say that 1 month your income dips. Let's take the example we just had of the government shutdown. I think the shutdown was about 40 some days. A person who had their insurance with a cash value in, say, a IUL, they could have adjusted their premiums to just pay the fixed amount, and then when times got better, they could pay the difference without it affecting the policy. Example: a firefighter manages overtime income. So if you're used to making a certain amount of income and then it drops, you could use the premiums or the income that's in the cash value to supplement your income until your overtime came back. Now that is a option. It is not the option, but that is a option. Reason six, living benefits. So I'm going to go another way. Let's say that you're a dispatcher and you want to maintain your independence, but you get sick. Well, if you have accelerated benefits during a critical or chronic illness, say cancer or some type of situation where you are in need of medical services, but your income is low and you need a way to pay for it, accelerated benefits might be a way that you would benefit from that. Because what accelerated benefits do is they allow you to get up to a certain portion without you dying, people. In other words, you can use it to pay for a critical illness or a chronic illness and would not be taxed based off of that. And let's say that you want to leave a legacy, wealth transfer. For some of you, that's a big deal. So a tax advantage legacy plan is what you need to do. And in my example here, we use a physician who wants to fund his family in charitable goals. Maybe it's to your church, maybe it's to your synagogue, maybe it's to your mosque, maybe it's to your favorite organization, your alma mater, whatever it is, that is a option. Or maybe you just want to leave it to your loved ones. That is a option to transfer wealth. Okay, before we get started, I need to tell you that this is based off of ones and zeros, and you do need to look at this with a licensed professional. So what an IUL is not, it's not a stock investment. It is not crypto. It is not short-term investing. It requires proper structure. And for that, that is where you get with a financial professional, i.e., an insurance agent, and make sure that this is correctly done. Well, let's go with who this IUL is best for. It's best for business owners, it's best for first responders, military and veterans, healthcare professionals, pretty much people like you and me. So, we've talked a little bit about IULs without getting too deep. Hey, for the last few minutes, we've been talking about IULs. And what I want you to understand that a decision needs to be made one way or the other. Either you will or you won't. But I partner with Ethos, and they are a reputable company. And if you scan this QR code here, what it will do is it will allow you to go to a link and see how this may best fit your financial mission or your financial goals as far as protection of your family or your business or what have you. Either way, if you haven't done this already, you need to get started. Look, this is Mike Barnes, the financial first responder. Please like and subscribe to my channel. Thank you for your time. Happy New Year. And scan the QR code up here one way or the other, and see how it can be beneficial to you. Till we talk again, God bless.